Efter en orolig vecka har den här veckan inletts med glädje på börserna i Europa. Ser ut att bli lika glatt i USA förstås efter besked om att amerikanska myndigheter ska öppna på nytt. Med oss för att diskutera både oro och optimism har vi Kevin O'Dowd, of course a veteran stockbroker joining us from Boston. Kevin, I want to start with this weekend's news, of course, that American government might reopen and hopefully do that soon. This has created a lot of joy in markets. Your thoughts on that?
Absolutely. Look, last week we were on the way for a healthy correction. We had a 4 to 5% pullback. That's the market just catching its breath. I think it's been 132 straight sessions above the 50-day moving average, one of the longest runs in history. You don't unwind that kind of strength in a week. Last week I said I was expecting a 10% correction. We started down that road, Gabriel, and then Friday reversed right on cue. That hammer reversal into the close told me sellers finally exhausted themselves. Now I still expect a 10% correction, but it's probably not going to happen right now. Not with the move over the weekend. The government shutdown resolution, I think, changes the near-term liquidity picture. The repo markets are calming down. SOFR's rolling over. The plumbing looks much better. Here's the thing. Market tops don't come on bad news. They come on good news. When the markets finally sound positive, everyone relaxes. That's when complacency sits in. We're not there yet.
What about, could this be, these good news essentially about getting rid of the shutdown after 40 days and counting? Couldn't that create this complacency? Couldn't this be a step in that exact direction?
Look, absolutely. But look, I want to make it clear. Pullbacks are how bull markets breathe. They clean up positioning, they reset sentiment, they let the trend reload. If you look at the tape, last week did everything you'd want from a healthy reset. Breath washed out, then we bounced. The S&P tagged the 50-day moving average and the 38.2 fib retracement level. That's textbook. All of our exhaustion accounts that we look at completed across all the majors. It was perfect timing. That's what a functioning market looks like. Corrections are maintenance stops, not trend breaks.
So last week, even though we talked about a 10% correction, and that's where we go when we talk about corrections, even though we only got 5 last week, that could be enough. That could be enough to soothe our nerves and give us more strength and optimism going forward.
100%. Look, I think peak to trial on the NASDAQ, which was the leader on the downside and on the upside, was about 6.5. What I'm going to be watching for this week, Gabriel, is, what signals matter the most to me. We're looking at 3 buckets: liquidity, structure, and confirmation. Liquidity, the stress we saw in the repo and the silver mid-October market, that's eased. That's huge. When short-term funding relaxes, risk assets usually follow. Structure. 67.25 is a big support level for us. We closed right on that on Friday. You hold that in the near term, the year-end rally stays alive. And then confirmation. I'm watching for follow-through day, a 1% plus rally on higher volume than the prior session. That would signal buyers are back in control. I think you also have to keep an eye on the VIX. It reversed on Friday, and you have improving short-term breadth underneath the service. So these are the things that I'm looking at right now.
Just to repeat what you said, we have liquidity. We got the structure that you're looking for. We went to support levels and we turned around there. And now we're waiting for the confirmation. So today's trading in America will be very important to get a feeling for where we're heading in the near term.
100%. Again, what I would be looking for is a market over 1% and higher volume than Friday's session. That to me would signal buyers are back in control.
That's an interesting point. So you want to see higher volumes on a good day than you saw at the last bad day to know that this is truly heading in the right direction.
100%.
All right. You've been sounding slightly bearish when we talked last week. You say there's still a correction ahead of us, but it's not very near. Can you talk a little bit more about that? Your view in the
Sure. In the next few weeks, look, I'm still constructive, just not euphoric. Liquidity is improving. Yields look capped. Seasonality is a tailwind. Could we chop around here? Absolutely. We may retest the lows before making new highs. That would actually strengthen the setup. But unless something major changes, a credit accident or another policy shock, I think we grind higher here into year-end. This isn't a blow off top. It's a mid-cycle reset. Now, look, I also want to say this. It's very hard for technical guys in this type of market when you have a Trump administration that can change the tape on a tweet. It gets very hard.
But it's fun. It's good times for the press, at least. Kevin, this is not a scripted question, so beware. Do you believe in Santa Claus?
Do I what?
Do you believe in Santa Claus? Santa Claus comes and he pushes markets up at the end of the year.
I do, but I still think we're going to get that healthy 10% correction. And I'm still looking for that. I'm just sure know where it's going to come. If it's going to come between now and year end or, after the first of the year. These corrections are very healthy. And how I expect it will react is a lot of the stocks that people are long, say the Mag 7, these high duration tech names, when that happens, get absolutely hammered. On the 19th, we have earnings for NVIDIA.
Mm-hmm.
That we'll see how the tape reacts to that day. But they'll lead the pullback, but they'll also lead the next rally. They're still the earnings engine of the index. In the first place, institutional money hides once the smoke clears. So if we get that correction, it's a buy the panic setup, not a reason to run for the hills.
All right, we talked about some companies. We talk a lot about technical factors. Any macro factors that you'd like to point out as we go forward, apart from government reopening?
But only as far as it drives liquidity. Everything else is just noise to me. And here's my quick macro dashboard. Rates, the 2 and the 10-year yields, both printed sell setups last year. I'm looking for rates to come in. The dollar's had a rally off the bottom long term. I'm still very bearish on the dollar. It failed at the 200-day moving average, easing global financial conditions. So I'm still a long-term bear on the dollar. In liquidity, SOFR's collapsed back towards the Fed IORB rate. Cash is available again. That's what I care about. Technicals just show when macro fundamentals are hitting the tape.
One last question. If and when we get that healthy 10% correction, you mentioned the Mag 7 names, they've been up quite a lot. Would they move more than 10% in a 10% correction? Would you look at 20 or 30% drawdowns for the big
100%,
names?
100%. But understand this. Volatility isn't danger. It's opportunity. You can have a bull market without periodic fear. Every correction feels like the end of the world in real time. But statistically, it's a great entry point for investors for the next leg higher. And, liquidity stabilizing, internals are improving. We've got favorable seasonality into year end. And I think if you're going to borrow, a line, tops come on good news, bottoms come on fears. And right now, fear is doing exactly what it should, resetting the cycle.
Resetting the cycle and giving us an opportunity to chat again. Kevin O'Dowd, it's always a pleasure. Looking forward to following this Trading Monday. And until next time, thank you.
Thank you.